Hello, friends. Welcome to the Weekend Investing Good, Bad, and Ugly weekly review for the week ended 29th of November. This is a weekly report that we publish for Weekend Investing viewers as well as other YouTube viewers. We've recently launched something called the Portfolio Momentum Report. This is a very unique exercise which you can do to ascertain the health of your portfolio. So you can go to this link, you can use the QR code, or there's a link in the description, and you can upload your portfolio by putting in the stocks and the quantum of the amount of stocks that you hold, and you'll get an email which will assess the health of your portfolio from a momentum perspective. Two critical parameters will be studied and reported. One is momentum score. So what percentage of your portfolio is in high versus low momentum stocks, giving you that snapshot versus benchmark portfolios. And it will also tell you if you are weighted more concentrated towards any particular stock or sector. That kind of feedback will be there. So this is a free tool. You can use it every month, every 2 months, whichever frequency you like, and keep the assessment of the health of your portfolio in mind. Also, from our research desk this week, we've issued these content pieces. There was a case study on Jet Airways. There was a case study on gold and market crashes, how gold behaves, how inflation is pushing us back every day, and hence we need to invest in inflation beating assets. How US is the mother market and drives the rest of the world. How FPI rotation to defensives may be taking place. And can we ever get out of this matrix? You will have to see the story to see what's inside that. These and more are available on the Weekend Investing app. They're also available as a newsletter that comes to you every day. So lots of things, and there are also specials that we do on each Sunday. So this Sunday, there's a special video on MIMT All Cap, which completes 6 years, and there will be a content around that. Please do read the disclaimer and do subscribe to this channel if you haven't so far. You can click on the bell notification as well. So this week, Nifty started with a bang. You can see here that Nifty had a huge gap up. It stayed there for 3 days, basking in the new political strength that the markets got from the Maharashtra elections. And then on expiry day, there were some games that were getting played. So expiry day came, the markets came off, closed this gap, and on Friday there was a pullback towards 24123. So overall, a 0.9% gain this week, nothing lost really. Market is consolidating here for the past 1 month also. Market really hasn't gone anywhere. You can see here from start of November till end of November, market has remained virtually stable. Of course, there was a huge slide from end of September towards mid of November, which even breached the 200 DMA. But then there was a spring back action post the politics uh, and the outcome of the elections. So we're right there. So we are sort of in middle ground, not in a territory where you can see that the risk is is done with. I think above 24,500 is where that point will come where you can say that significant risk to the downside has been reduced. As long as we are above the 200 DMA and above this recent lows, I think we remain in some sort of a range. But this is much better than last week, I would say. Um, on a weekly basis, also, you can see that in the last 8 or 10 weeks, we've had mostly down weeks, just 1 week coming from the bottom and the gap up week here. So it still remains to be seen whether we will now pull back towards the highs or we will sort of rotate here or drop down below. The next major points of support, of course, are the recent bottom and the election day bottom. That is the sort of reference points for the worst case scenarios. And of course, the best case scenarios are we go hit a new all-time high in the next few months. Global markets have been in a fine fettle. S&P 500, the mother market, has hit a new all-time high at 6,000 plus. There is a lot of expectation that the new president will come in, and the kind of noises that have been made in terms of trying to bring in efficiency in the fiscal deficit that the US has and trying to shore up manufacturing inside the country and putting tariffs on everybody else. It remains to be seen what kind of impact it will have on the rest of the world. Now, it may so happen that if they come in very strongly, put tariffs on everybody, and there's a rush towards the dollar, and dollar index and US yields were strengthening. That may have a negative impact on the rest of the world. Gold also has been stable this week, minus 2.2%. We had this huge fall about uh, 4 weeks back. It topped at near 8,000 in the Indian rupee terms, came down to nearly 7,300, then bounced back to 7,800, and we are now stable at 7,600. So I think this is possibly consolidating and waiting for the next release upwards to happen. It doesn't look like a very weak chart to me. The good part for emerging markets for precious metals is this, that the dollar index has started to come down. This has been strengthening since beginning of September, exactly where Nifty has been getting weaker. So you can see the correlation. As soon as the dollar started to strengthen, Nifty started to weaken. And now that Nifty's dollar is beginning to lose its strength, Nifty is finding some feet where it is. In terms of the benchmark indices, in the last 1 week, Nifty was up 0.9%, Nifty Next 50 up 4%. So this has been a huge run in Nifty Next 50, likely due to Adani stocks, where Nifty Next 50 has many Adani stocks. Nifty mid cap up 2.4%, so very healthy 1 week growth there. Small caps subdued at 0.7%, and Nifty 500 at 2.1%. So if I see over a month, Nifty Next 50, Nifty Mid Cap have done all right. The rest are still down. Over 3 months, all indices are still down, minus 4% on Nifty, minus 5.6 on Nifty Next 50, etc. Over 6 months, all indices are very much in the green. So it is a 3 month phenomena that we need to deal with here. But over a longer periods, the numbers look fantastic. I mean, last 1 year, Nifty, despite this fall, is up 20%. Nifty Next 50, despite the fall, is up 49%. Nifty Mid Cap is up 32%. Small Cap at 31%, and Nifty 500 at 26.7%. The numbers for 3 years and 5 years are also fantastic. I mean, these are annualized figures for 3 years and 5 years, annualized returns. You can see mid caps have given 23% annualized returns in the last 3 years. 29% of small caps in last 5 years. Nifty, of course, is at 12.3 over 3 years, which is sort of normal for Nifty. Over 5 years, 14.9% is also fantastic for Nifty. So the point that one should realize here is the context of this current fall is meaningless when you look at the kind of 3 and 5 year annualized returns that we have been enjoying. So any period of consolidation, any period of repricing in the market should be looked at as a normal course of correction and normal course of consolidation. Within the sectors, in the short term, this week, media, of course, was up. PSU banks were up 4.7, oil and gas up 4%, public sector enterprise stocks doing well, commodities doing well at 2.7, energy 2.6. So these were some of the big movers upwards this week. IT and auto were the odd ones out, which lost ground this week. Private banks also not doing much at 1%. If I look at 1 month trends, then in the last month, energy, commodity, metals, oil and gas have really lost the big ground, whereas media and IT have done well. Real estate also surprisingly has done quite well despite tough conditions in the markets. PSU banks have eked out 0.8%. If I were to see the last quarter, then financial services, banks, and IT are the ones which are in the green, and you have big losses in oil and gas, energy, public sector, enterprise, and the public sector enterprise stocks and the public sector banking stocks. Uh, the Nifty sectors over last 6 months, you can see IT has done really well. Metals have done the worst here, energy and PSU banks along with them. But the good part is that most sectors over the last 6 months have not really seen any bloodletting. Less than 10% for all falls, whereas on the higher side, you've seen some sectors really, really take a very nice move. So in terms of short-term momentum, media, banks, IT, PSU banks, they remain at the top. Although IT in this last 1 week has really lost out in a big way. Let's see whether that percolates into a more meaningful downtrend. But over 6 months, 3 months, 1 month, is something that IT has done quite well on. Autos, energy, and metals are at the bottom of the pack. Autos and metals and energy are trying to make a comeback. You can see that public sector enterprise is also trying to make a comeback. So gradually, these stocks, these sectors can move up. In terms of very long-term views, you have 1 year, 3 year, and 5 year views here. You can see almost all sectors have done really well over, let's say, a 5 year period, except I would say media we can ignore because there's not too many media stocks, and this media sector is largely impacted by Z and NDTV. Private banks have done only 8% in the last 5 years. I think this is a reasonably worrisome sort of situation right here. Over 3 years also, you can see IT has done only 7%, and private banks are at 11%. Public sector, of course, is right up there. And you also have, private banks over last 1 year also at 9% only. FMCG also is not doing so well as expected at 10% on that 1 year. Long-term momentum also, you can see public sector is ruling the momentum flows. Real estate, auto, and PSU banks are behind that. So these are the sectors that have really done over a consolidated 1, 3, and 5 year period. Banking, financial services in general, FMCG, these are the ones that have been at the bottom of the pack in the last 5 years. So next 1, 2, 3, 4 years, maybe this will change, and you will see new winners coming into the longer sectors. FII stats this month have been disastrous. We had 2, 3 sessions of green, largely because of MSCI inflows, and then a couple of sessions of green post that, almost zero here actually. So FIIs have been relentless, and DIIs, of course, almost contra to FIIs. On days of FII buys, you had some DII sales. So this trend has been quite uh, continuous from the start of the month to now. In terms of trend check, if we were to see how many of the CNX 500 stocks have remained above the 200 DMA. So at the beginning of the middle of October, we had 74% stocks above 200 DMA, and that came down to nearly 38%, and which is now recovered to 53%. So still quite low. So almost half the stocks are below 200 DMA, which is not such a good sign. And if I were to see a smaller or a shorter moving average, then the 50 moving average has seen as low as 11% stocks below the SMA 50. And now, of course, it is recovering very fast. It's up to 35% right here. The top 10 and bottom 10 performers of CNX 500 are mostly Adani stocks this week. 33% on Adani Gas, 29% on Adani Transmission, Adani Green as 25%, Vodafone Idea at 25%, Bharat Dynamics. So these are the lost stocks that have really come back up very rapidly from the defense sector. Bharat Dynamics, then you had GRSE, you had Cochin Shipyard, some of them gaining more than 20%, FSCT, then again Adani Power up 20%, Tata Tele. So most of the stocks in this list are those stocks that were heavily beaten down, and there is a comeback of sorts. Whether that will sustain or not is to be seen. What has lost this week has been Webco, Amber, uh, GTND, Nalco, Alcom. Not much of losses actually, 4 to 7% losses. Webco, of course, losing 13%, but not much losses on the downside. Bajaj Auto has been on a losing spree for some time. So that's all I have for this week's good, bad, and ugly weekly review. I hope you liked the new content here. Do give us feedback on this particular piece, and we'll be waiting for your comments. Thanks. Bye.